Hello, everyone. Don Garman and Jackson Vickers here again from Mirador Capital Partners, June 2025. We haven't checked in a few weeks. Was going to check in last week, and then we've got tweet bombs and chaos storms. So I decided to delay it for 1 week to see that everybody was going to stay cool and hold their cool for the next week. And so that all appears to have died down. Um, I wanted to come on because obviously the tone, certainly in the markets, has shifted in a positive direction. And we were asked by a few of you between 4 or 5 months ago and the last video to signal that we were getting more constructive, and I did that, and I reached out to a couple of you, and obviously we've been on a nice run for the last several weeks. That we were getting more constructive. Where you would always see that first, of course, is in the actual positioning of the strategies, and as we ease off brakes, it's a signal that we're willing to take on more speed, and so that has been happening over the last several weeks, starting multiple weeks ago now. And I think some of you have even commented, have noticed that there has been a acceleration, and so that's we're happy that you've noticed. And I wanted to suggest why I think that is the case and what might be happening in the current moment. Then I'm going to turn it over to Jackson for any observations on the financial planning and the important work he's been up to. So I don't know if this is going to come across, but I'm going to share my screen for just 1 second. It is a common theme for these videos, and it has to do with the discussion and topic of earnings and earnings estimates. So what I want to say about this topic in this moment is the stock market in general is a discounting mechanism. It's looking forward. We can debate how far into the future, but let's just throw out maybe 6 months as a number. So we've looked at this number, and I'm sure they're too small to see, but this is the 2025 calendar year that we're in, earnings estimates looking forward all the way back from 23 to the current time. It's not important that you know these numbers or have to zoom into them, but what is important is the direction of this line. You can see this upper left to lower right slope to earnings estimates as a reflection that and how these are how they come about is all the analysts out there in the world whose jobs is to look at these businesses and try to discern what these businesses are going to make in earnings. They'll come to these conclusions independently of one another, and they arrive at some consensus. And that's an approximation of the, kind of smartest people who understand these businesses the best and what they're going to earn. And when the slope of the line is coming down that hard, prices are going to feel pressure. It's hard to continue to mark up the future when we think companies are going to be earning less and less. And I'm just going to shift from this number, which is $262 of earnings as of today, but on a flattish base here. And I'm going to roll forward to 2026 estimates. So as you'd expect, they've also come down and also basing or flatlining here, but this is equally important. The numbers here are 300-ish, give or take, 298.63, 298.43, 298.68, 300. So my point in June is if the market is looking forward 6 or so months, that's 2026 already. So the market's starting to price in potentially a trough in earnings in the back half of the year, and perhaps and if we're going to get to 300 from 263, it's going to be going back up. So it is a time that we can be cautiously optimistic about the future and the state of, all of the chaos that we've endured along the way to get to where we are. Um, and and that's kind of how we have positioned the strategy. So we've, eased off the brake and onto the gas for this moment and through the summer. Of course, this is always subject to change in the future, as it has in the last couple months. And I'm happy. And I everybody gets a little impatient after these longer periods where we've got kind of our foot on the brake. So we are, as you've heard me use our many metaphors, quieting the ride as we've gone through these really challenging months. And now we can kind of take a little bit of a deep breath as we go into the summer and know that things, at least underneath the surface, are getting more constructive. So I will leave it there for my piece. Jackson, what are you working on, and what are you seeing from your side of the the office?
Yeah, absolutely. I would say on the market side of things, I'm following the reconciliation bill very closely. That's going to have a lot of impact potentially on markets, and then also following yields and spreads. The only major thing that we've seen there is obviously the 10-year yield has climbed a little bit up towards that kind of 4.5, 4.4 range, but we've been trading in that range for a couple of years now. So I
Mm-hmm.
don't think any major cause for concern. And then the high yield spread relative to investment grade has been condensed quite a bit. And I just think that's because investors are generally looking for higher yielding instruments. Um, and then on the financial planning side, we've done a lot of great work with RSU and your company equity, your incentive stock options. A lot of great planning there. We had a couple referrals that we were very grateful for, and we appreciate those. We did some great incentive stock option planning for those clients and helping plan for AMT, which is obviously something that's quite shocking to many people and they don't know it exists. So helping clients plan for that has been super productive. And so thank you for that.
Yeah, I appreciate all of that. You have done a tremendously great job for the people and I have to go back to thanking the people that watch these videos, because this is objectively the best year of Mirador's history, measured in a number of ways, but new clients and the certainly the quality of the relationships that we're getting the privilege to introduce ourselves to. And it's just been a wonderful uh, a humbling stretch. And so I appreciate all of you clients who watch this so much. Thanks for sending your friends in. It's been awesome. Um, on that note, Jackson, any final words?
Yeah, so one last thing, and I want to say
Yeah.
thank you everybody on the 1031 exchanges that we've been discussing for seems like quite a while now. Lots of traction there, and those have been great investment vehicles. So thank you for to all of our clients for the referrals and the trust on
Yeah.
that as well.
Yeah. We'll just call this a great summary of current positioning and big thank you video this month.
Yeah, absolutely.
So we will touch base before our nation's Independence Day on July 4th. So I'll touch base very early in July for, in just a couple of weeks for that update. But steady as she goes, and keep knocking wood, and hopefully cooler heads prevail in Washington. I hope someday our fearless leaders in Washington will get their head wrapped around our fiscal imbalances and get our country's finances in order. We are too great of a country to be this out of whack relative to what we spend and versus what we take in. My own editorial comment, of course, but math is math. So but we won't tackle any more of that today. And on that note, happy early summer, everybody. We're coming up to solstice here in 10 days, I think. And so enjoy these long summer days, and we will talk to you all soon. Thank you.
Talk to you soon.